Deflation has come to the Eurozone, with prices falling by 0.2% in the year to December, raising fears that the currency union may be heading for a period of prolonged stagnation, just like Japan did in the years 2000s. Now, some of us here at the FT think deflation can actually be a good thing for Europe. This is Sarah Gordon, our business editor. Sarah, so nothing to worry about? All these fears are exaggerated. The Eurozone is doing fine.
Well, I'm not suggesting that the Eurozone is doing fine. What I'm suggesting is that policymakers would do well to focus on other demons other than deflation. Deflation has lots of good effects as well as bad effects. One of the things I think we should think about is how would we be feeling now if we were in a slump and an economic slump and we had inflation? That's one point. The second point is that rather than economists, I talk to a lot of companies on a daily basis. I have not yet spoken to one big or small European company or company chief executive who has said to me, I am worried about deflation. You know, if I've got a list of 10 things I'm worried about, is deflation even in that top 10? No.
But surely, the argument goes, now that consumers see prices falling in many parts of the Eurozone, they'll think again about going out and shopping now because they think, well, you know what, that car, buy it in 3 months, it's going to be cheaper. That must be weighing on your corporate executives' mind.
Well, that is the big that's the economist view, isn't it? I would say 2 points. One, there is no deflation apart from in oil. If you take the recent numbers out of the Eurozone, core CPI, i.e. the bit outside energy prices, is actually rising. It's not rising very much. It was only 0.8% in December. It is nevertheless rising, not falling. Secondly, if you are a motorist and you are filling up your car with petrol now compared to a year ago, you feel that little bit richer. At the margins, lots of other good things are happening in the Eurozone as well. We just today had industrial production data from the Eurozone, surprisingly high, and a revision upwards of what was happening in October. Retail sales are much more positive than they were a year ago. Even the German IFO index is showing signs of life after, I think, 6 consecutive months of decline.
That's all great, but there are a few people I can think about who are really a bit embarrassed about inflation being so low, and that's the policymakers at the European Central Bank in Frankfurt. Now, their target is just below 2%. Inflation is now in negative territory. Surely this is pretty embarrassing for them.
Well, I think, embarrassing is maybe perhaps the wrong phrase to describe it. They have a target. We can argue about whether the target is right or wrong, but that is the target that they are mandated to fulfill. Therefore, they must do what they need to do to try and get there. My argument is that even if they are so worried about deflation and they pursue full quantitative easing, whether that's in the form of sovereign bond buying or even corporate bond buying, that's good for Europe's companies. At the very least, it continues to lower the cost of borrowing in public debt markets. That, in combination with some of the other really rather positive indicators that we're now seeing out of the Eurozone, plus the boost to consumer spending power that I believe falling energy prices will deliver, actually paints a positive picture for the outlook for Europe's companies.
Well, so let's first of all see what Mario Draghi and his fellow policymakers decide next week with the ECB. And then we'll also see whether the positive outlook, which Sarah has depicted so powerfully, will materialize. Thank you very much.